This is Freedom Investor Radio, and I'm John Pearl. It hit me like a freight train when I realized there was a better way. When I discovered that I could take my future into my own hands. When I realized I could invest my way to freedom. This is what I'm working towards. In each episode of Freedom Investor Radio, we will explore the tactics and strategies used by the top real estate investors and entrepreneurs in the nation. We will learn how you can start investing your way to freedom and take control of your life. Thanks so much for tuning in. What's going on, everybody? Welcome back to another episode of Freedom Investor Radio. I'm your host, John Pearl, and today I am joined by Bronson Hill of Bronson Equity. So Bronson, how you doing today?
I'm great, John. It's really great to be here. I love talking about freedom, financial freedom, all things related to passive investing and just how to learn and develop yourself to become a better person. So I love what you're doing.
Yes, great spot for that. So Bronson, I'd love to hear about kind of, how you got to where you are today. If you can tell us first, kind of what you're doing right now and how you got to where you are.
Yeah. So what I'm doing now is we have about 150 million in different multifamily real estate assets, raised about $20 million for different deals. This all started for me about 4 years ago. I was a well-paid consultant in the medical field, and I'd had a rental house. I'd done some single family stuff, had a few single families, but I had a cousin that came to me, and my goal at the time was to get, passive income and get 30 houses. So I had 4 houses. And my cousin, who was an experienced multifamily guy, he said, that sounds like a lot of work. And the more I thought about it, I was like, you're really right. That is a lot of work. And so he's like, you should do multifamily. And I said, well, I'd love to, but I don't have the money. And he said, you can raise the money. So that really led me on a journey to read every book I could find, listen to a lot of podcasts, go to events. And over the next couple of years, I was able to start a meetup, raise some money for a deal, be able to, find a partner. And basically we raised together $15 million, for different multifamily deals. And since then, I really launched my own, company just a year and a half ago. So it's been great though. It's been a great experience, a lot of learning. And I absolutely love talking about commercial real estate, particularly multifamily. I feel like it's an unfair asset class. People can invest passively and get better returns in the stock market with lower risk and get some incredible tax advantages, which is great.
That's awesome. So you you started off in the single family space, and sounds like your cousin was it that kind of gave you that light bulb moment. So let's talk about maybe the mindset that you had to, maybe some mindset shifts that you had to have. Was it easy going from single family to multifamily? What was that like for you?
Well, I think, there's this really interesting book out that I recommend for everybody. It's called The Third Door. So like 3 doors, with door number 3. And this guy, he's 19 years old, and he basically has it in his mind that he wants to interview some of the greatest people in the world about success. So he wants to get in front of Bill Gates and ask him about business. He wants to get in front of Tony Robbins and ask him about personal development. He wants to get in front of Lady Gaga and interview her. And basically, the long and short in the book, he's able to actually do all of the things he set out to do. But he gives us an illustration of the third door. And he said, it's almost like a nightclub mentality. So again, this is a nightclub illustration. I'm not a big nightclub guy. I don't know if you get 3 young kids, you're probably not a big nightclub guy.
Not anymore.
If you drive by, you've seen a nightclub in the city, you see there's 3 doors. There's one is people are lined up for blocks. They're lined up for half a block to get in. That's the line most people stand in. They kind of just, stand, single file. There's a second door, which is kind of the VIP entrance where the celebrities and the wealthy, they kind of come and they'll get out of their car and they'll go right in. The third door is where you jump out of line, you run down the alley, you knock on the door, you pound on the window, you find a way through the kitchen or, through the basement, or you find some other way in. And really, the reason I share that story is because a lot of things that I've done, whether it's, medical sales, medical consulting, or going into multifamily, there's not a specific way. Here's how you do this. Right? Here's the roadmap of how you get from here to there. And I just wish there was. But the challenge with that is it's typically, you'll meet people to say, oh, you can't do that. You can't do this. You can't, that's impossible. How could you leave your job? How could you raise money? How could you? And I had a job where I was making, over $200,000 a year. I was working 30 hours a week. So it was kind of the golden handcuffs. And why I wanted to leave is I wanted to have more control over my time. I didn't want to have to be chained to a job. And so to me, I have so many ideas, so many entrepreneurial ventures I wanted to start, and I love traveling, so I travel a lot. But there wasn't a direct how do you get from here to there. So the idea of the third door is what he found is that every successful person that he interviewed, including all these famous people, they all found a side door. They found another way in, and they found a way to get to where they wanted to go. So the reason I share that he was able to connect with Zuckerberg and these different other guys as well, but the reason that's important is, in this journey of trying to get there, there was no specific, here's exactly what you do. I just had to learn, I had to grow, I had to meet people, and just stuff started opening up. And that's what I think the biggest thing I have is when you actually start taking action, their life really has an action bias. Tony Robbins has this quote, and he says, it's in your moments of decision that your destiny is shaped. So the idea is when you make a decision that I'm going to leave my job within 2 years and have covered my expenses through passive investing. That's something that I said, and I did it. It actually happened. And it happened because I said it, because I created it. I don't know how I'm going to get there, but I'm going to do it. And then I just, your subconscious kind of goes to work and you figure out how you're going to get there. And so I think the personal development side is just really being open to non-conventional ways to get to your goal.
Love it. I love that. So you talked a little bit about your W-2 job. You had a sales job, you're making good money, and it sounds like it was pretty good hours. So talk about the skill set you had. A lot of people that are successful in this business have a sales background. It's a great skill set to have. Do you think it's necessary to have a sales background to be successful in the multifamily space?
I don't think it is. I mean, I think there's different ways to go. When I first started, I'm also very analytical and I read a lot. I think I read 60 books last year. My goal this year is to read 60 more books. Like I read a lot. Always trying to learn stuff, pretty analytical as well. But, when I first started, my goal was actually to find a deal because there's usually kind of two ways to get into multifamily, investing. It's very much a team sport. So either you go out and you find a deal. So you're networking with brokers, you're trying to actually find a deal. And then you maybe find a partner and you find a way to kind of get the deal done, to operate it and to raise the money and that kind of thing. Or you're on the money raising side where you basically help to try to bring people in, you educate them, they invest with you, maybe you invest your own money as well. And so I started to actually try to find deals. And then I realized maybe actually, bringing investors to deals might actually be a great way to go because of my background, because I love working with people, because I like creating, educational resources and I like really helping people on their journey. So I think it's not important. I mean, there are people that are really good, especially the engineer, CPA background, people that are more technical. Those people are also often great at finding deals or great at managing deals. For me, I could be on the phone all day. I literally had days where I'm on the phone or on a Zoom call from 7 a.m. until 5 p.m., just 30-minute slots pretty much all day long. And that's normally okay. Sometimes you get a little bit, it's the same conversation, can be a little challenging, but if you're sick or something, you're not feeling well, that can be a little tough, right? Because so I started kind of staggering those a little bit. But I think there's different ways to get there and you have to figure out, it really only takes the deals and the money. So if you can be like, okay, am I finding the deal? Am I managing the deal? Or am I raising money for the deal? And those are really kind of the major parts. So as long as you get those figured out, so if you're good at get with people and maybe you feel like you have some good contacts, you can generate that and raise money, then you can need to find somebody who's more analytical or somebody who has more experience. So I think that's the amazing thing. The other thing I'll say about that real quick is that you don't have to have a lot of experience to get started in this. And that's what's amazing. So one of my partners now has over 10,000 units and has 25 years of asset management experience. So when I've been doing this for 4 years and they say, hey, I'm investing my own money and I do my own underwriting, I'm a part of all the different aspects, but I'm not the primary guy, right? This guy has 25 years of experience and he can smell a problem before you even see it coming. So I think just the idea of realizing that multifamily is a team sport and figuring out what the right seat on the bus is for you, the sooner you can figure that out, that really allows you to kind of focus on that. And then you just do that.
Yeah, I couldn't agree more. That's one of my favorite aspects about apartment syndications, investing in multifamily. You can leverage the experience and the time of other people who've been doing this a long time to benefit from, their knowledge and get to experience those returns. So I know that you've had, as you mentioned, you've done a ton of conversations with potential investors. So I'd like to kind of talk about, for anybody who may be interested in passively investing, What are some things that some common issues that people are worried about in investing in something like an apartment syndication, and how, what do syndications offer that can kind of ease their worries?
Yeah, so I think everybody's afraid of what they don't know about, right? So if it's a new investment, I've never invested in it, or I don't really not familiar with it, and nobody I know has invested in it. It just sounds like the human mind when they're confused or it feels uncertain. There's nobody you have never done it. Maybe nobody you've known has done it. It just feels like it's just an idea. Like you probably would never do that, right? Until you meet somebody who's actually done it, or you feel like you understand it. And so that's the thing that I think people we need to realize when we're talking with investors is just, when I get somebody on the phone, I try to pretty quickly figure out where are they at. Have they, only doing stocks and bonds? Are they high net worth? Are they just kind of, not high net worth? Or, there's a physician, I think of a conversation where a net worth of 5 million has only invested in stocks and bonds. Well, that's a different conversation than somebody who's invested in 10 different syndications and they're asking very technical questions, right? So there's going to be a different kind of range of who you're talking to. But I think the biggest, the way people really choose to invest, John, I think it's when people add value, when people come in and they say, "Hey, I'm actually going to, find a way to help educate and give so much value to this person." There's a trust that happens when that happens. So when I talk about multifamily, or I talk about raising money, or talk about any of this stuff, I hope that anybody listening, will take this and run with it, and they will be successful. And I have the personal belief that people will be much better off putting their money into multifamily syndications with pretty much anybody. I mean, there are certain red flags to watch for if somebody, obviously maybe consider somebody's reputation or who's invested with them, their track record, all that stuff is very important. But for them to leave their money in Wall Street, I'm just I'm just so disillusioned with it. And I used to be an investment advisor in the past, so that's another side hustle that I had at one point. But what I realized is just people, when they get value from you, it builds trust. And so in the process of working with people, don't be too quick to sell anything. Just try to help. The best salespeople are helping. They're helping people. Nobody wants to be sold, but everybody wants to have a problem solved. So if you're a good salesperson, you're good at raising money. You're just simply wanting to understand what people's problems are. High earners have a huge issue with tax. Some people pay 30, 40, 50% or more in taxes. And it's just crazy. Like in California, I think it's the highest rate is around 50%. I think it's right above 50%. So when you count the state taxes as well. So, these are issues of just trying to get in, help understand what somebody's problem is. And then the more you educate, if you have passive ways to do this, like I have an email newsletter I do, I have stuff on YouTube, I have social media, I have things that are just kind of going out there. And then as I educate people and somebody reads a blog or catches a video or sees me on a podcast or listens to a podcast, like they're going to get more of this is, okay, I feel like I know this guy, I understand this guy. And I've had that experience before. I met somebody in person and I felt like I knew them, but we never talked before, right? So it's just the idea of you're adding value. People listen to what, they want to listen to all your interviews. They want to watch everything you're doing because you're just the one who's helping to add value to them.
Love it. So a couple things that I've heard since I've started my journey in trying to educate folks on why I love multifamily investing so much. Eviction moratoriums, rent control, inflation, the devaluation of the U.S. dollar. We're due for a crash, right? So how does multifamily investing kind of hedge against some of that stuff?
Well, these are all risks. I know you and I were on an event last night, a little panel we did with some really well-known economic folks on inflation, and we're in a time right now where it's really important not just to pay attention to the asset, meaning not just to look at real estate or look at multifamily. It's important to look at the economy. It's important to look at politics because we've created 40% of all the currency that is in existence just in the last couple of years. So naturally, everything is going to cost a lot more. So there's long-term trends of being very inflationary. Yet we're seeing such low interest rates that if they raise rates, there could be some sort of crash in single family or certain assets. So that's a deflationary trend. So you can have both inflation and deflation at the same time. So I think, in general, when you're looking at multifamily, some things that we look for, we like properties that are actually a little bit older. And a lot of people will say, why would you want some older? And I think a lot of people are drawn to kind of the flashy images of brand new apartments. But the thing that people forget is that, you and I are not going to live there if we invest in it, right? We're going to invest in this property and, it really doesn't matter. The newer, nicer properties that we would live in, typically the returns are way lower. And I think personally, the risks are much higher because if you're buying in really nice apartments, like where I live in Pasadena, California, there are some 2-bedroom apartments that are like $4,500 a month. And they're in the prime area and they're newer apartments and that type of thing. But if there was a recession, I guarantee you they would not be charging 4,500 per unit. They might be down to 2,500 a unit or 35. They'd be much, much lower, and that would really hurt the performance. So I think real estate is very location specific. We love areas where we're seeing population growth, and where we're seeing that for the most part is the Southeast in the U.S. So you'll see just so much migration moving from places like New York and California, going to these warmer places where there's a business friendly, landlord friendly. We like kind of secondary markets. One we're in is Jacksonville, Florida. It's large enough where you have 1.5 million people there, and yet you'll have all the amenities, everything you need, but people can still buy a decent house for about $300,000. So there's also, one retiree moves to an area like this, then you have multiple people that have to support them. You got people cleaning the house, you got retail services, you got healthcare, you got people, washing the car or selling cars. So you have all these different services that need to go support this one person. So in certain areas like that, we're just seeing just some phenomenal growth. And so we buy, particularly in these areas, and we bring investors there as well. But I think it is really important to think of the entire thing as a bit of a puzzle that you're trying to kind of figure out what's actually going on and where do you think over the next 5 years or 10 years, where is the growth going to happen, both from apartments. We have a substantial demand and a shortage in apartments. We're going to need about 6 million or so more apartments in the next 5 to 10 years. Where is this going to come from? Well, they just can't build them fast enough or cheap enough. So this older stuff that we can renovate and do some value add is really a nice way to go.
Great. So you've been around for a little bit, and you've got some experience working with other operators. In your opinion, what are some things that passive investors, limited partners should be looking out for when they're performing their diligence or vetting out a deal sponsor? Any red flags for them to look out for?
Yeah, I mean, I think reputation is important. I think, and how you get reputation. I mean, the biggest thing that I think you can do is go to events when you're, especially if you're in a sizable metro area. I mean, there's different meetups going on, even in Los Angeles now, with some of the restrictions still with COVID. I go to national conferences in Texas, and the biggest relationship that you're going to make at those events is other passive investors, because they don't have a motivation to sell you anything, right? So I'm an operator. We do deals. I have a motivation to want to have people do our deals, and it's a good motivation, right? But I'm not going to be the one who's going to be unbiased in sharing about deals. So talking to other people that only passive invest, it can be really valuable, because they'll tell you about different groups and what their experience has been or who they've invested with and who they like. It's going to be very valuable. I think that when you ask people, when you get an operator on the phone, it's really important that you ask, what has gone wrong in a deal? What are some things that have worked, not according to the plan? And if they say, everything's kind of gone fine, we haven't really had anything, hasn't gone well, either A, they're inexperienced, or B, they're just not being honest, and neither is really good. So I think just people that are willing to be honest, because if they're, being able to share bad news, being able to share things, negatively that, have not gone well in the property or properties they've been a part of. We have stories where, we had things where cash flow is delayed or things we didn't expect or underperformance with the property management. And that stuff helps you grow. So everything is learning. But I think, somebody who has some stories of, some war stories and things like that, I think are really good. And then also the track record, how have things actually performed? What's kind of the ideal, goal of success? If somebody's had some exits, meaning they've sold some properties, that gives some experience to say, okay, this is some track record. And I think those are all important things to look at. Some with partners that I work with, at least on the general partner side, I typically will do a background check on every person. You can ask for that when you're working with as a passive investor. You can ask for a background check. But I think reputation is really huge. And I think knowing other people that have invested, or even asking for other people that have invested, I think can be really helpful.
Now, so something I don't hear discussed too often is, what about for the other GPs out there that are listening, red flags upon initial conversations with LPs? Like, you don't want to just take anybody on, right? It's got to be the right fit.
I got a story about this. So I have, there's a guy that was going to invest in one of our deals. I won't say who it is, but it was a partner of mine who kind of joined as well. And he had an investor that, now part of it is my friend had not set up the conversation well. And it's all about managing expectations, because people, if they've never done this, they're going to be nervous. They just don't know what to expect. You have to really hold their hand. You have to tell them, ahead of time what to expect, how it goes. I typically tell people, distributions. When do distributions start? I'll say it typically starts around 6 to 12 months after we close, but it depends on the performance of the property. We've had some take longer, we've had some pay it 2 or 3 months. So my friend had said, "Oh yeah, distributions start in 3 months." And so, again, that's just anybody who's an operator is like, "Oh, why would you ever say it?" But anyway, so he said it. So literally, it was like 3 months and one day, or just after 3 months, this guy starts calling him, and he starts getting really irritable and upset, and starts calling him a liar. I mean, all just temperamentally, this is like the person you don't want to be in your deal because they're just obnoxious, whatever. So we ended up like buying the guy out, and this ended up being like our single best performing deal ever. And this guy was like not able to be a part of it. But again, it really works both ways. It's like if you go to a job interview, you're not just looking for like a great job. You want to know like, how's this boss going to be? Are they actually going to like trust you to do the job? Or are they going to be like, hounding you every 10 minutes for something, just really micromanaging every part of your life. So the same thing with investors. Not every investor is suited, they have different goals, they have different things that they're going for. But I really think when it comes down to the temperament, if somebody gets irate or they get hurtful or they start calling you names, and that stuff is just stuff hopefully you can figure out on the front end. So I've said no to a number of people just because I don't think we're a good fit. I don't think that, once you get any of those signs, it's like, I don't know. And I have relatives where I'm like, I don't know if I have to invest in my deals. I've really said that, like I have some relatives. I'm like, I love them, but I just don't know if we'd be a good fit together, and that's totally okay.
Yeah, I think that's really important, especially for people who are starting out. They want to bring equity to these deals, and they'll likely just take anybody on. But it's definitely important to manage those expectations up front, like you said, and make sure it's a good fit. So I want to talk a little bit about mentorship. So I've gotten a ton of value out of mentorship, multiple different programs. I wouldn't be where I am doing what I am today if it wasn't for mentorship. I'd love to hear your thoughts on that, and paid versus unpaid, best ways to go about finding a mentor.
Yeah, so I didn't do a paid mentorship for my multifamily stuff. I took a little bit of a different route. My third door was basically just really trying to find people of value and really adding value to them. Jim Rohn has this quote, and he says, "Make yourself valuable to valuable people." And so, and that's a paraphrase, but basically it's finding people that are doing something that you admire and trying to find a way to help solve a problem. Now, for these successful people, they're always thinking about these issues and how to solve them. But what is rare is the individual that comes up and instead of saying, "Hey, can you mentor me for free?" or "Hey, can you do this for me?" they're saying, how do you solve this problem? What's the issue? This issue in how does this work in your business? And if you want to have someone really, it's amazing what happens. The reason I say that is when you can help someone and you create value in their life, they almost feel obligated to kind of help you out in a way too. So for me, I actually almost got a paid internship. I got paid. I mean, my net worth of, when I partnered with a well-known syndicator, my net worth went up 10x over a couple of years, really just from doing deals. And so I got paid really well, basically, to be mentored on not only, all the different steps of, multifamily deals and how they work. So I think it's, and there are people I know that, having the structure of having a mentor is really, really helpful. So I think it depends on where you're at. Now, if somebody has a net worth of, a higher net worth and it's like, I want to invest in my own money, whatever, a high paid mentorship may really make sense. Or if you're in an area where you're like, I just really am not quite sure what to do, a mentorship it will probably get you there much faster. But I think what really comes down to is whether you do a mentorship or not is, do you take the actions? Do you take steps to get moving? Kind of what we were talking about earlier, that like life has this action bias that if we just actually start doing something each day, we will dramatically get closer to our goal each week, each month, each year, and we'll see the progress.
That's great. And I love what you said. I'm a huge Jim Rohn fan. Reading his stuff's completely changed my life. Becoming a person in the marketplace that other people want to do business with. It's huge. So on that note, you mentioned The Third Door. Are there any other books out there that really had a huge impact or, shifted your life course that, just were huge?
There's a lot. I read a lot of books. A book that is unrelated to business. However, I know you're a personal development guy as well. It's amazing to me when I've had a breakthrough in my personal life, how it has led to a breakthrough in my business life, or my career. So one book that's really helped me a lot, it's a short book. It's called The Gifts of Imperfection, and it's by Brené Brown. Talks about owning your story, shame, vulnerability, empathy, things that may seem unrelated. But if you really want to put yourself out there, if you really want to grow, if you really want to just get to the next level, there's a lot of things in there. And I would just literally read a page and then just have to journal it and put it down for a day or two. So it's probably my favorite book of all time. Another great book when it comes to negotiating or just working with people to kind of try to find win-win is a book. The book is called Never Split the Difference by Chris Voss. That's an awesome book. He's a former FBI negotiator, and he just talks about very practical kind of tactics and how you work with others to create win-win. And that's also a really excellent book.
Nice. Yeah, I have not read that one yet, but I have ordered it. It's up on my shelf. Haven't gotten to it yet.
I love it.
So we're in February now. It's 2022. What kind of stuff you got going on this year and goals for the rest of the year?
Yeah, so we raised about $6 million last year for different deals, multifamily. We also have an ATM machine deal that we're doing, a project. We're hoping to do more of all of the above. So the goal this year is to raise over $10 million to buy a bunch more. I think we added 1,000 doors last year. So we're just continuing to grow and scale. I'm just continuing to try to network and meet other individuals that, I feel like I can add value to, and that they are looking for what we offer with, passive income and things like that. I have some personal kind of fitness goals. I've started the last year doing competitive Spartan racing. So I've been training, and I just completed a race recently, and I actually beat my time from the prior time, 6.5 miles. I beat it by 16 minutes. So I saw some pretty significant improvement. So I'm not exactly where I want to be, but I'm continuing to see improvement. I think that's a really exciting thing.
That's great. You got to have those things to work towards. So if people like what you're saying, want to do business with you, where can they find you, or where can they follow you on social media?
Yeah, so I'm on social media. I'm on YouTube. I have a YouTube channel. This is also this book, ebook I wrote called The Single Best Investing Strategy During and After a Pandemic. It's 24 color pages, and it's a free download at bronsonequity.com. You can check that out. Just talks about some of the unfair advantages of multifamily and other types of investing. So you can check that out. But yeah, I'm happy to reach out if somebody has any specific questions. I actually do have, you were asking for people that are wanting to raise money from investors. I have a list of the questions that I ask people when I get on the phone. I'm happy to give that out. So if people want to email me, it's bronson@bronsonequity.com. I'll be happy just to email that over to you.
Excellent. Well, ladies and gentlemen, Bronson Hill, thanks so much for coming on.
Thanks for having me, John. Appreciate it.
Thank you for listening to Freedom Investor Radio. If you like what you heard, make sure to rate, review, subscribe, and share with a friend. Thanks again for listening.